So what is meant by the term yield? Now this is going to be more of an animation video. So if you watch my how-to videos, you see a hell of a lot of animation. And I thought I'd try and make this one a little bit more exciting. So let's jump into it.
What does yield mean in property? Now the word yield is both a verb and a noun in the English language. The verb being to produce or provide, and the noun being a financial term. Now yield is often a term used within property to identify the strength or attractiveness of an investment property. A low yield, often to those looking for a yearly return on their investment via rents, will not be seen as attractive as higher yields. Now although yields aren't the only thing I personally look for, again a video for another day, I will stick solely to this for anyone needing to understand the concept and use it almost as a metric to analyze their deals or opportunities. You see, what I've done here is attach a yield graph, which I've used very quickly over the years just to analyze my deals. Now just a very quick reminder, there is a huge difference between a gross yield and a net yield, because a net yield will take into account other associated costs you need to factor in that the property requires. Now these may include your insurance, your mortgage, accounting for voids, or just general wear and tear maintenance. So in a property, a yield basically tells you how much of an annual return you are likely going to get from your investment, and it's generally shown as a percentage. It's calculated in this simple formula: annual rental income divided by the property value that you bought it for. Then, to ensure this is shown as a percentage, you multiply the number by 100. So, for example, you buy a house for £100,000 and it rents out at £500 per calendar month. That gives you a total annual rental income of £6,000. Therefore, the calculation will be 6,000 divided by 100,000 times 100, which here you will see showing a gross yield of 6%. Now, to calculate the net yield of this particular example, you would need to factor in the other costs that I mentioned above, such as your mortgages, your insurances, and if it's a leasehold property, you need to account for ground rent and service charges. Again, another video for another day. Now, whether a yield is good or not depends on your own strategy. If you know your money is not earning more than, say, 1% a year, and it's just sat there doing nothing, you can definitely benefit from an example like this. Now, of course, like I mentioned before, there is a lot more to a property investment deal than just your yield, such as capital appreciation, how to add value to properties, how to pull money out. But for this particular video, I'm going to leave it there. But of course, as I mentioned on every single one of my videos, I have 50 videos already scheduled without producing any new ones to really help you move forward and save yourself absolutely thousands of generic information that people are going to try and sell you through their courses and through their mentorships. I will give it for absolutely free.
Now just very quickly, I want you to all take advantage of the comment section below, where I will be responding to all of your inquiries. And also, if you need an extra 15 minutes just to elaborate anything in this video or anything else I've done, please do check out the booking down in the description below. Hit that notification bell, make sure you subscribe, because like I said, I'm going to be bombarding you with so much information that you're going to have the ultimate course available on YouTube to literally navigate your way through the property industry. So until next time, thanks for watching.